What's up, everyone? My name's Adam Davis, and welcome to Fintech Insider On Air, episode 31. Thank you so much for joining us last week. We had a bunch of people live and even more watching afterwards, so thanks for all your support as ever. Last week, Leader talked to Ronit Ghosh, Head of Global Bank Research at Citibank, about the future of banking. Really great episode. Go check it out on his Periscope and on the 11FS YouTube channel. This week, we are reverting to talking about financial literacy in children. Now, I'm potentially no expert, so joining me today is Lucas Johnston, founder of Umber. How you doing?
I'm good, thank you. How
Welcome.
you doing?
I'm good.
Glad to hear it.
I've got my chamomile tea, I've got my water, I'm well prepped.
That's all you need.
It is all you need. So, I suppose straight off the bat, let's do what is Umber?
Okay, so Umber is the project I'm working on at the moment, which is effectively to build a bank that is designed and built for young people. So the majority of banks that are out there at the moment have been the majority of fintech modern banks can't really make money from young people because you can't really lend to them, they don't have big deposits, you can't do savings. So they take the average 30-year-old and make an account for them. You've seen like hundreds of e-money providers, and you have like your Monzo and your Starling and your Revolut. But none of these are really focused on young people or children. There are a couple out there like GoHenry and Rooster Money and Step, which has got a funding round from Stripe, that do have a children's product, but in reality they are a product for parents. They are to monitor your child.
Right.
And it is pitched to parents. I saw a GoHenry ad on the tube on the way here, and that was aimed at parents, which I think is the wrong way of thinking about it, because for a young person, you know, if you're taking your first steps into finance, that should be the easiest, most seamless process.
Okay.
And so that's what I'm trying to do, to build a bank which is designed for young people with the features they want. Things like a bank of mum and dad, things like student discounts that automatically apply, all this kind of stuff, with hopefully financial education sort of weaved throughout the app.
Cool.
In a gamified way.
Okay,
Yeah.
that sounds lots to explore in that.
Yeah.
So that sounds pretty good. Just before we go into that, what's your story? So there's going to be plenty of people watching this, like looking at the two of us and thinking, you know, who's younger? That's what they're going to be asking themselves. But that, you know, the obvious answer aside, a lot of them are going to be thinking like, you know, these modern day challenger banks in general, built by millennials, you know, 30 plus. There's like a genuine Gen Z sitting right here, creating his own bank. What's the story, man? How did you get to this position?
That's a good question. So I've always been interested in computers since I was a kid. Everybody was always terrified to let me play with their computers when I was younger, because I would always give viruses to all of them because I'd just click absolutely everything.
Oh, you're one of those guys.
Yeah, I was one of those people.
Nice.
But there got to a point where eventually I stopped giving people viruses and started like removing viruses from computers and actually learning about how they worked rather than just clicking aimlessly everywhere to sort of explore.
Okay.
From that, I sort of wanted to explore more. So luckily, my school was one of the first schools to be enrolled in Google's education program back in like 2012, 2013.
Cool.
And I was one of the people who was in one of their sort of ambassadors involved in rolling that out, which was fun, sort of gave me a bit of experience, got Google on my CV. Then after that, I sort of wanted to actually work in a tech company. And I tried asking Google and they were like, no. So I went for a startup. So I just found a startup I liked and quite literally cold messaged the CEO, said, hey, I'll work for you for free for a week. And they were quite relatively early stage then. Somebody's offering them free work, they sort of wanted to take it. So I ended up joining them as a software engineer, but we were quite small. So I did a bit of everything throughout the course. I did some logistics, PR, all that kind of stuff.
Cool.
Yeah, and so I did that pretty much throughout secondary school, throughout my GCSEs, and
Cool.
I sort of left towards the end of sort of the life cycle of that startup, just before my GCSEs when I was 16. Then I did my GCSEs. I didn't have the best family background, so unfortunately didn't get great GCSEs and had to leave home. And unfortunately, I was sort of put in this position where I was pretty much going to be made homeless, but the council wouldn't give me anywhere for a month or two because there are waiting lists. So I was sort of like, okay, imagine that I don't want to be homeless, so imagine this isn't an option, what could I do?
Right.
And so I was like, okay, well, I need money in order to live, so how do I make money? I get a job, et cetera, et cetera. And there are tons of ideas in my head of why I couldn't get a job, but I sort of tried anyway. And I ended up sort of getting in touch with Starling, and ended up sort of being introduced to everyone, ended up sort of being offered a job in that first sort of initial conversation with them. And it sort of went from being homeless to being a banker in like a week turnaround, which was quite interesting. So that was
learning on the job.
Exactly.
It's amazing what a week can do.
I know, right? That was pretty intense.
Yeah.
But then after that, I joined Starling as a software engineer. About 4 months in, I had a chat with Anne, who's CEO of Starling, and because I had special approval to have a Starling account at this point, and so I was wondering why shouldn't every other 16 to 18-year-old have a Starling account?
Right, got it.
And so we had this discussion, and it ultimately ended in sort of me with various other people sort of leading the force to bring 16 to 18 accounts to life at Starling.
Right.
And then I sort of worked at Starling for about a year or so, and then after that I ended up moving across to Monzo.
Cool.
To also work on young person stuff and also be an engineer in sort of organizational scaling and that kind of thing. Then I very recently left Monzo because the landscape has changed quite a lot. And I wasn't able to really do young persons at Monzo. And I believe in this idea really strongly, so I thought, if I can't do it here, I may as well just try to do it myself. So I left to try and do it myself. And that's where I'm at the moment.
Man, that is proactive. I love it. That's a great story. And hopefully you'll be retelling it for a long, long time. That's awesome. Cool. So, this week, Rooster Money, friend of the show, episode 316, produced some stats around young person's bank accounts. They've said that comprehensive new study reveals average pocket money, I'm going to read from the stats, drops to $4.25 a week. That's per week. Kids are saving 34% of their pocket money compared to the adult rate of 4.8%.
Okay.
Top earning pocket money chore this summer is washing the car at a cool £2.56. I would pay my kids if they could. I'd pay them £2.56 to do that easily. Top 5 things they're saving for: Lego sets, phones, holiday money, Nintendo Switches, books and magazines. Big ticket items. Thoughts on those stats?
I mean, the majority of them are unsurprising. The thing that surprised me most is that the 4th most wanted thing is a Nintendo Switch. I did not expect that. But yeah, none of those statistics are particularly surprising, I think. I think when you're a child, you have, especially the stat on, 34, I think, compared to like 4 or 3%, save their pocket money. That doesn't surprise me at all, because most children have very little income, right? They have £1 to go to the sweet shop. They get maybe a few pounds a week. That's very, in comparison to adult money, that is worth like a whole salary. That is a lot of money to a child. But equally, they know that all the big things they want cost hundreds and hundreds of pounds.
Yes.
Or well, hopefully not that much, but they cost a lot of money. And so over time, being able to put that money together to save for that big thing, to sort of visualize that goal and try to earn towards it, and to be able to get that is sort of a, it's not particularly surprising to me. That's sort of a standard sort of trait amongst young people.
Yeah, I'll tell you what's quite interesting about it is that like the kids start by saving more, like inherently within you. Therefore, you would assume that if you get a lump of money, the majority you're inherently programmed to save. And over time, obviously, that 34 turns to 4.8. So the pressures of life essentially reduces that percentage all the way down. And what's interesting even more is that for the 34% of money that kids are saving, there's no actual monetary value attached to that. I know there's a couple of fintechs. I was about to ask you about this. You've got a wry smile on your face, so I'm hoping you'll say what I think you'll say. There's obviously a couple of fintechs in the States that are looking at providing interest to kids who save, which is super interesting. And that whole concept of incentivizing your child to and reinforcing those behaviours of saving and the value of savings, I think is completely not explored here in the UK. Is that something you'll be looking at Umber as sort of a feature set, or?
What, the interest on accounts?
The ability to provide interest. Yeah,
totally. I mean, I think there are a number of interesting concepts that you can explore. The majority of them aren't explored because I think the standard thing would be, okay, a bank provides interest, a bank is the one who loans out money and all these kind of things, which brings a set of massive problems, and so it's not particularly safe for children to have, start loaning money from a bank, for example. Yeah. But if you replace that banking entity with other entities, I think there's actually quite a few really interesting things you can do, like loaning money from your parents in a banking app that actually feels like you are actually loaning money. There is actually enforcement on that, but not, to a bank degree, because it's your parent at the end of the day. Like it's not the end of the world if you loan 20 quid and never give it back to them. Yeah. Whereas for a bank, that situation is far, far more different. Things like interest as well is also really interesting concepts. I think there's sort of this blanket thought that, kids won't understand interest in all these sort of financial terms,
Yes.
and that they won't be interested in them. But actually, sort of, it's not that hard to get your head around if you think about it at a really basic level. And so I think that if you can explain it at a really basic level and start sort of building up that knowledge set over time, you can start introducing them to more and more complex financial topics.
Yeah, when we had Go Henry and Rooster Money on the show, the Fintech Insider show, Insight show we did, we talked about how important it is for young people, children, to learn about financial education, financial literacy, and actually develop those skills through actually applying what they're learning. And how, certainly back in my day when I was at school, we never had anything like that. So there was never a course, if you like, or anything that you would learn at school that would tell you how to spend your money, how to save your money, what interest is. In fact, the first probably piece of, or the first exposure to that is if you ever took economics just from a macro level, which is not necessarily applicable to the day-to-day. Again, do you feel, in terms of how important is it that children learn that early, and can you see or ever see your kind of product tying up with an educational element to really sort of reinforce that through the school system?
So I definitely see this, like the product that I'm building, to tie into the educational element. That's actually one of the core sort of cruxes of where this idea sort of has come from, is that every child deserves financial education, every single child should get one. As to learning at a young age, I think it's incredibly important. I think a lot of, well, I don't have research to back this, but my sort of gut feeling from talking to people is that a lot of people don't approach children with financial topics because money is how the world works, right? We live in a capitalist society, and so there's this sort of inherent link between understanding money and understanding the entirety of the way that the world works. And so people think this is a massively complex issue that they can't teach to children, and they're too young, and it's stupid to even think of it, right? But in reality, there is a big difference between learning about sort of money concepts and, how the world works. Yep. So money concepts are effectively, they sort of fall into three main categories, which is spending, saving, and sharing money. And those are really, really important things to teach your children at a young age, because there's been some studies about this, and it seems to be that by age 3, roughly, your child can start grasping basic financial concepts. But by the age of 7 or 8, those concepts actually start becoming really solidified and harder to change in an individual, and actually takes a lot more work to change it. If you can, at a younger age, like make your child understand the importance of saving money and sharing money as well as spending money, then that sort of will make the rest of their life far easier. And there's been a number of studies that have also linked this to, graduating from university and having jobs in the future and having a more successful life when they learn these things at a younger age.
So interesting on that. So then, I guess the normal way banks work at the moment is they see life events. This was certainly the life events and was all the rage about 5 years ago in design sprints in tier 1 banks. But they looked at the transition from a child from being at school and then going to university as the pivot point. That's when you come out with a student account and you try and they flood the universities with branches and people giving out free this, free that, whatever else. Try and push them into branch to fulfill an account. That age, because of the way that we now interact with our banks, is obviously getting younger. At what age do you think is the right age to start actually targeting a proposition to? So, and I know you just said 3 is at the point where you start learning, but that will be difficult. It'd be an interesting one from a product manager to try and crack, but that's a difficult one. But in your opinion, I suppose, in terms of what you've seen over the past year, where would you pitch it?
This isn't necessarily where I'm going to pitch my product, but in general, as to where you should start teaching your child, I think at a very basic level of these money concepts, you can start teaching them around age 3, but just not with the idea of money and banks and all this sort of other stuff around it. You can start teaching basic concepts like saving and spending versus sharing with your friends at a far younger age. I think maybe between the ages like 6 and 8 is sort of when those concepts start solidifying. That is sort of, I think, in my personal opinion, sort of a good point where you can start introducing more, I wouldn't say like reality about this is actually money, this is the way that money works. It's sort of those ages sort of build from that. Yeah. But that's just my opinion.
No,
I also don't have children, so.
I do. My 3-year-old, I've got a 3-year-old and a 1-year-old. I can assure you, my 3-year-old wouldn't take. It'd be interesting actually to think of like a children's book that you could write, which indirectly talks about the value of things.
Yeah.
I think that might go down well. I think any actual explanation, at the moment he just picks up money and just throws it at his little brother. That's the kind of the interaction that my kids have with money at the moment. Hopefully that will change. So that's kind of interesting. And then I suppose on one respect, you're looking at potentially targeting, because you said at the beginning you weren't necessarily going to target the parents, you're going to target the children themselves, which is a kind of an interesting split from what's on the market at the moment, where you appeal obviously to the parents because the parents ultimately are the guys who are going to fulfil the orders. But I suppose how would you do that? And then on top of that, is there any regulation, is there any scrutiny that's going to be applied to a proposition which targets kids directly?
I mean, I don't like using the word target so much.
Sorry, scrap that. Producer pet, get rid of pet target.
But I think I think that it's ultimately like any product for children. Like there are various products on the market for children, not just in banking. You're talking just general commercial propositions for children, right? And so, from a regulatory perspective, this isn't something that exists right now. So I think this is sort of unproven ground, and I think that sort of, as we sort of go on with this, it will be interesting to see how the regulator responds and what the regulator's thoughts are. So I'm sort of more interested to sort of tread that path and see. I don't think it's something that is really set at the moment. But yeah, I think in terms of sort of getting young people to like this, I don't think if I'm very honest, like the options that are on the market for children and young people are so bad that I really don't think it takes that much to build nice modern fintech products like the hundreds that are out there already, but just do it for young people with some things that are targeted on young people. I think that's a massive opportunity. It's just most people don't touch them because you can't make money from them the normal banking way. But if you can explore that, if you can explore those other ways of doing that though, then you've got a massive opportunity there.
So to that end, before we get into the economic, I'm going to dive deep into the economics, but there's an interesting point that and around at what age do you potentially produce a proposition for? But the problem, or the from a product perspective, is that those ages obviously change, 9 to 10 to 11 to 12. But what children are interested in changed so dramatically from 9 to 10 to 11 to 12. So what they're interested in at 10 is not the same as 11. So how much do you envisage that the actual proposition and the feature set that you produce would need to change year on year? Because that's quite, it means obviously from a technology perspective you've got to be super flexible, but from an actual sort of, I guess, marketing and go-to-market perspective, likewise, you've got to be really, really slick. Do you see there being a challenge in terms of how a product manager builds for that?
Yeah, I mean, that totally makes sense. I think initially I'm sort of, my head has been stuck between going for sort of the younger ages, so sort of 8 to 14, and going for more sort of secondary school sixth form students for a while. I think I'm sort of more hard leaning towards actually going to the slightly older demographic, towards secondary school students and sixth formers. I understand how that might how that might sort of present itself as a problem, but equally I think as long as you know your audience and you're building something with them, I don't think it is, you know, the market changes a lot, but as long as you listen, I don't think it was that hard to respond to them and go, okay, well, we've seen that they like these things now, let's build features to do that. It's just sort of working in a sort of responsive, agile way, and it's building for the customer rather than building something that the customer must accept, which is kind of what they've got at the moment. Yeah,
and I think the more sort of your 11, 12-year-olds turn into teenagers and teenagers turn into late teens, the more generic capability you can probably produce. Because if you're looking at the things that change or the things that matter to a 16, 17, 18-year-old, there's probably quite a lot of similes there between those three, whereas from an 8 to 9 to 10-year-old, it's probably completely different. So yeah, that's an interesting one. And then just before we delve into the feature set, what's, I guess, good look like for you? So it was interesting, this is one thing I asked the Go Money guys when they were here, Louise was here. And I sort of said to her, the Go Henry guys, and I said to them, what does, I suppose, from a long-term perspective, what would you expect your customer base to do after, they fulfilled their product? And the answer back was, well, potentially go and use one of the new challenger brands because, like for like, it's going to be quite similar from a experience perspective. But again, for you, are you building something that customers, or you can see, those who've gone to university then migrate off of, or is this something which you could continue to use?
I'm
Have I just asked something which you haven't thought about?
my answer is that I think I'm keeping all options open, right? Like there is a revenue model which is semi-used in the market, which is that, you know, once your customer turns, you know, 18, 20, whatever, once they finish being a customer with you, I just open up an account with my partner bank like NatWest or HSBC or even a new bank like Monzo or Starling, and they convert to being a Starling customer as soon as they've turned 18, and I've built up that really good relationship with them. And I can profit off of that, and that is that sort of a, you know, that is an economic model which I could choose. But equally, yeah, there is the option of growing the bank larger and larger to a point where actually the customer stays with us forever, and this grows into something that's far bigger. Like both are options. I'm not cutting out anything off at the moment, but I think, you know, initially, at the moment, I'm definitely, you know, I can't build a full bank on day one. Yeah. So initially they will definitely leave.
You can go quick these days. You can go quick, but one day is pushing it.
Exactly. And I mean, to be fair, I think that I don't think I would be surprised if many customers who would use this product would go to, if we don't do the whole send them off to another bank when they turn 18 or whatever, I'd be surprised if they wouldn't go to a Monzo or a Starling. If once you've sort of had that sort of fintech experience, it's hard to go back to a traditional bank because it's just they're different worlds, right? And the legacy bank is just not caught up yet. Fair.
Okay, cool. Now that all makes sense. From a feature set perspective, if you had to, if you thought about like your last year working within these, like the realms of these propositions, what's like your top three, the coolest features that are either on the market at the moment, or without giving away any IP that you potentially might want to be doing, like the stuff that you can say, like what's like the coolest stuff? Because at the moment you're looking at things like, as we said before, parents being able to set interest rates or savings rates to their kids. I think that's pretty cool. If you look around, just having quite a seamless experience around, you know, chores and whatever, I think that's actually quite, I mean, I'd love to use that on my kids once they're older. I'm going to have great fun doing it as well, and so on and so forth. But like for you, what do you think has stood out?
So I think the good thing about being 18 and doing this is that I think I have a relatively good idea of what young people want from a sort of bank account for them. I don't 100% know, but I think I have a somewhat good idea. I've obviously had pretty privileged experiences throughout my lifetime, so I have a very small segment of a very large demographic. But I sort of just go back to things that I would have really liked, like pocket money when I was younger, being able to, my mum to be able to send that to me and me be able to send money to my mum really, really easily, right? Maybe having things like tasks that she can add to some kind of screen where I can be like, okay, you can get £5 if you clean the car or do this or do that, and I can send a photo of them and go, cool, I've got the money in my account now. Yep. Things like being able to, realizing that, you know, I'm going to Nando's with my mates and I don't have enough money to cover this, being able to borrow £20 from my mum, knowing that I'll be able to pay it back next week because actually I've just checked and I've got money coming in next week, kind of thing. Like all of those features. So being able to do things like loans, but in a, you know, controlled way, pocket money, like all these, I think there are various areas and there's a lot. Yes. But I think there are so many areas which are completely untapped that have so much room to be explored. I think all these things are, you know, they are relatively sort of prime wants for young people.
I think what Go Henry have done with their cars, again, you can see it on the adverts, they've sort of pushed you know, the schemes to the limit in terms of actually sort of what card fulfillment looks like and the patterns and the designs, etc. And I think that it's starting to look some really great stuff. Yeah, some great stuff coming out.
The difficulty you have with that though is that when you build a kid's card, right? If you've got a pink Go Amelia or a card or whatever, or go I don't know, Henry card, for example, there will be a point where you will realize if you've had that since you were 3 or 4 years old, you'll go to secondary school, you'll have the bright blue card and everybody else will just have HSBC cards and you'll be like, I don't want this anymore, right? It might have nice features, but it looks like a kid's card. And when you're in sort of secondary school, sixth form, that's when you really start coming into your own and start building that independence up. Yeah. At least, well, whether you're good at it or not, you want independence from your parents. And so, you know, at that age, that's the point where you don't really want a Go Henry card anymore. So as cool as that is for children, I think, like for younger children and young people are completely different worlds. You have to build something that is like an adult product. You need to treat them like adults, not like children. I think that's the same even with details like the card.
Okay, cool. No, that all makes sense. That sounds good. A little bit on just wanted to touch on the economics before we get into the bank itself. So from an economics perspective, at the moment, I think Rooster Money have just introduced $24.99 a year subscription fee.
Interesting. Okay.
That's coming up. Others have got sort of this pay-for-play model. What's always sort of been the concept is that if it's and it's clearly $4.25 a week is now the average pocket money that gets given. But let's say it costs £5 or £6 a month for parents to subscribe to this. That eats into the kids' pocket money allowance as it is. What do you feel around that kind of dynamic? And then if that is restricted, how does this make money, or does it just wash its face, or is it partnerships, or what is it? What's the missing thing?
So I think that there is. I've had multiple views on this throughout the last sort of couple of months, and I've sort of been very much exploring the different economic models, because that is sort of the crux of the problem. At one point I was going to make it a full non-profit and only fund it from grants and partners, and I've sort of realised actually that economic model isn't so sustainable, and I've sort of landed on one now that I'm actually pretty confident in. I think I have a relatively solid idea, and I'm not going to go too much into detail on it, but I will say that one of my core beliefs from the start is that subscription models are not an option, right? It's I in the podcast the other week with Rooster Money and Go Henry, I sort of felt, and it's not just them, it's everybody who sort of speaks about young people and how do we make money off young people, we do it in a subscription model. Like, if you then say that, but then you start talking about how everybody deserves a financial education, you're being really hypocritical, right? Because you're only giving your services to the children who can afford it, right?
Yes.
And it's not just, the children who have parents who can afford it. Yeah. And it's not just that, it's also the children whose parents are bothered to look into it and actually decide to get it. Yeah. Like, it's such a small segment of society, when in reality, I think, having a good banking experience should be baseline for everybody from a young age. Having a financial education should, these things are just basics. And I think as soon as you put a subscription on that, you're not fulfilling the basics, you're starting to limit it. And so I've very much been adamant since the beginning that no matter what revenue model I choose, I'm not charging people for those core sections. Cool. I think if you look at what I say is that if you look at other apps and products that are not in the banking world, but that sort of only get their money from young people, if you look at sort of how they make money, there are some really good examples out there. I'm not going to say who, but there are some really good examples on the market of sort of, young products that are completely aimed at young people, don't charge young people, but still make money. Yeah. And if you can try and take those revenue models, which are not banking revenue models, but put them into a banking app, then suddenly you found that actually you're making money from young people using the app without them having to spend anything, and without you having, and I don't mean selling their data off or anything like that, I mean sort of working with partners and that kind of thing. There's so much room to explore, but you can't really use the traditional banking models. So what I'm effectively doing is I'm taking a banking app, and then I'm taking other gamified and sort of that and partnership commercial models and trying to put them together, and these are things that don't normally overlap. But if I can do that successfully, then I've got a revenue model where I'm making money and I can give this to everyone without charging them for it. Cool.
That is nice. That's our segment. That's our cutaway for the marketing piece. I love that. Just very quickly before we go, where is the bank right now?
In my head. We're really
no wonder you didn't give anything
away. We're really early stage. I mean, I have a few people who are interested. I'm speaking to investors. I've got a business plan together. It's a case of I'm sort of trying to figure out sort of the best route for getting investment and getting started as quickly as I can. That's sort of my sort of focus at the moment.
Okay, cool, nice, like it. So thank you very much. So that was awesome.
Thank you.
I mean, I've done the Fintech Insiders, the last one anyway. The Insight show on this is an amazing space. Super, super interesting. So thanks very much for your insights. That was really cool. That's all we have for this week. Where can people find out more about yourself?
You can find out more about me, probably best is on Twitter. So I'm at Lucas Johnston on Twitter. Or I've got lucasjohnston.co.uk is my website. Yeah. Cool.
And you can find me at AdamD8 on Twitter, and obviously at 11fs.com. Thanks so much for tuning in. If you want more insights like this, but you don't want to see my face, you can listen to Fintech Insider podcast. It's available on all your favourite podcast providers. If you want a topic discussed on air, hit us up over emails, tweet us at Fintech Insiders, and get in touch via the website. We will see you next week. Bye-bye for now.